Hello, everyone. It is Trevor Nicole, and I am here with your monthly market update for the month of June. And as always, I'm happy to be here. And if you look at the subject line, is the real estate market crashing? Well, I can say with absolute certainty, it is not. So, when you're looking at headline news, headline news sells and drives people to websites. I get notices from neighbors or family friends who send me, articles and blogs, and there's a lot of information that's out there. So you just want to make sure you're working with somebody who can provide you with the real goods and statistical data that will support what values are relative to your real estate. So, the reality is the Bank of Canada did a rate adjustment at the beginning of June, and we did think that buyers would be amplified to come back to the market. Rates are coming down. We just don't know with absolute certainty as to when. But with today's announcement that unemployment has creeped up a little bit, I think there's a further stimulus in opinion that interest rates may come back down another 25 basis points in July. So time will tell. If it's not July, I can almost say with certainty it will be September, at which time buyers will probably be coming back to the market. So, having said that, sales are down in the GTA about 16%, but yet prices are holding at 2%. Which is really, really cool when you see that. So we can see that there is a resilience in our market with, inventory has popped to almost 4 months of inventory, and listings have increased 67% year over year, which does seem like a lot compared to year over year statistical data over long periods of time. However, this is normal, and what we're kind of encountering right now is the stability of the market will resurface. So I have clients who are calling me and saying, what should we do? How should we market our property? I said, well, you have to market your property based on the characteristics and the activity that's happening in your specific neighborhood. And then you basically make an informed decision from there. If a house sells for, $1.2 million on your street, well, that's going to be the new number. That's going to be a benchmark you're going to have to compete with. If your house has characteristics that add value, then you make a delta and a dramatic adjustment to your asking price based on those components. But it's all relative, right? So if you're going to sell in, a market that is stable, you're going to be buying in a market that is stable. If you're going to sell when the market is pulled back a little bit, you're going to buy when the market is pulled back a little bit. If you'd rather wait for prices to go back up and sell at the high market, that's fine and dandy, but you're going to have to obviously buy in the high market. So, it's entirely up to you. It's a formula. The idea is to make sure that you're making an informed decision. So, when looking at the big story that we're seeing on the news right now, to shift gears a little bit here, is the condo market. So is the condo market tanking? As some folks think. Well, the reality is headline news, as I've said before, sells. And what we encountered over the course of 2023, we had 60 developments that did not come to market. So that's essentially a pre-construction category of the market where inventory would be delivered to our market in 3 to 4 or 5 years time. So that inventory is not going to be delivered. Right. And in 2023, we had developers who sold back in 2018, 2019 come to market. So we had an overabundance of inventory flood the market in the city of Toronto and the GTA and surrounding areas as a whole. So we have almost 8 months of inventory, which is incredible. So I saw a reporter on the news and, he's pointing up at these towers saying, these condos are half empty. Look at them all. They're all half empty. Well, they just got delivered to the market. So they're not half empty. They're half full, and they will be full. Once that absorption takes place, we're going to see a significant increase in real estate values in the condominium space. And as a matter of fact, 2024 had a historical record low of pre-construction sales. So just for those of you who may or may not be familiar with pre-construction sales, it's where you go to a sales center and you're looking at floor plans and you're purchasing based on the incentives that are provided today with future delivery, 3 or 4 or 5 years from now. That's what we call pre-construction. So for 2024, we have had a historical low sell-through for pre-construction. What does this mean? This essentially means that fast forward to 3 or 4 or 5 years from now, that expected inventory that's supposed to be delivered, which is essentially what happened in 2023, is not going to come to market. So it will not be available for sale. So what does that mean? That essentially means that the absorption will take place. And I have clients right now that are currently sitting on units that have come to market, and they're asking me, is now a good time to sell? No, now is not a good time to sell. Now is a good time to hold. You may be in a negative cash flow of 3 or 4 or $500, but fast forward 4 or 5 years from now, you'll see and look back at this discussion and say, thank you for helping us make that informed decision. But having said that, based on today's interest rates, it is a little bit more mathematically challenging to carry an investment property. So there are some circumstances where sellers will have to sell, and there are opportunities right now. So if I had somebody call me and say, where is the opportunity? Where does it exist right now in today's market? I would say 100% with absolute certainty in the condominium space in the city of Toronto. If you can get through the carrying over the course of the next few years, you'll see in 4 or 5 years from now, we'll look back and say, why didn't I buy 2 or 3 of those units and muscle through it? So these are just some nuggets. I hope you've got some value out of this monthly update. Until next time, I'm Trevor Nicole. See you next month.